Welcome, dear traders, it's me, Kate Stichin, and you are watching a recap of the Asian session. After a surge of optimism amid a fall in inflation in the United States, markets are gripped by fears again. Following a decline on Wall Street, trading in the Asia session was somewhat sluggish. Optimism ebbed away after the release of the Fed's meeting minutes for March. Policymakers expect a moderate recession this year. After dropping inflation to 5% in March, about 30% of investors believed that the regulator would take a pause in the tightening cycle in May. According to the FEDWATCH tool this morning, the number of traders betting on such a scenario has already exceeded 34%. It seems that more speculators are factoring in a dovish stance. Nevertheless, the majority still expect another quarter-point rate hike next month. A recession in the United States, even a mild one, is a bad sign for the global economy. Analysts are puzzled. Even if the largest economy cannot avoid this crisis, what to expect from other countries? However, in the Asia-Pacific region, there are countries with the second and third world's largest economies. Each of them expands in its own way. Today, China revealed its trade balance data. The region exceeded forecast by more than 2 times, $88.2 billion against the $39.2 billion of forecasts. Although the figure is lower than the previous one of $116.8 billion, investors welcomed the result. An increase in the trade balance is signaling the revival of China's economy after months of lockdowns. It may also help boost investors' confidence in a quick recovery of the Chinese economy. Such expectations are fueling the rally of the yen and commodity currencies. The unexpected jump in Chinese exports may indicate that the global economy is more resilient than anticipated. The US dollar, which has been falling for 2 consecutive sessions, slid even lower in the Asian session. Yesterday, it dropped sharply after the release of the US inflation data, and it shed 1 pip. The US dollar also incurred losses as the Fed minutes indicated the risks of a recession amid turmoil in the banking sector. On Thursday morning, the US dollar index consolidated in a narrow range of 101.4 and 101.6. At the same time, the euro looks like the winner following the US inflation data and the discouraging meeting minutes. Thus, the greenback is declining amid a stronger euro. It has already approached 101.5. Later today, the US will publish another batch of economic reports, namely the producer price index and weekly initial jobless claims. Therefore, the US dollar could try to gain momentum and rebound from the current levels. The yen is also taking advantage of the situation. Yesterday, the dollar-yen pair plunged to 232.9. Today, the US dollar retreated from the 4-week high reached on a Wednesday, so it's in the bear's close. The yen hit an intraday high following a US inflation data. In the Asian session, its growth was facilitated by the speech of Kazuo Ueda at the G7 meeting in Washington. He explained the reasons for sticking to the ultra-loose stance. The Bank of Japan will continue with the monetary easing so as to achieve the price stability target in a sustainable and stable manner. While supporting the economy together with the wage hikes, he pointed out. The politician added that the consumer inflation in Japan currently stands at about 3%, and it's likely to fall even more in the future. Falling inflation and a stable economy bolstered the yen's appeal as a safe haven asset. However, the Japanese manufacturing industry is in dire straits due to the high energy prices. A weak yen only worsens the situation. There are the main factors that may undermine the rally of the yen and limit its fall. Besides, the Japanese currency is very sensitive to the movements of the US Treasuries. In the morning, they did not affect the yen as they were in a negative territory. Only the yield of a 10-year US government bonds showed moderate growth, and the yield of a 2-year Treasury notes tumbled, notching the first negative reading in 5 days. In the early morning, the yen was moving in the upward range of 132.9 and 133.4. The dollar-yen pair is now flirting with a pivot level of 103 points. Inflation in Australia also declined to 4.6% from 5%. Moreover, it has been falling for the third month in a row. The Australian dollar could hardly rise amid such news. Nevertheless, in the Asian session, it climbed to 0.6724. The Australian currency was trading in the bullish price corridor of 0.6685 and 0.6737. Its growth was mainly triggered by a weak US dollar as well as rising oil prices. The Aussie advanced significantly after the labour market report for March. The figure beat economics expectations, and the economy added 53,000 new jobs versus the forecast reading of 20,000. The central bank that has recently taken a pause in monetary tightening may face a new problem. Traders are more or less sure of what decisions the regulator could make at its May meeting. It means that the Aussie may receive support and grow against the US dollar. The New Zealand dollar also advanced amid a weaker greenback, amid economic data from China and the health of the US fresh economic reports. In the Asian session, it climbed to 0.6328. Although the Kiwi failed to break through the strong resistance level of 0.6260, its downward movement is limited now. The Kiwi is likely to be trading in the range of 0.6204 and 0.6243, gradually rising. Its upward movement may persist at least until the release of fresh US economic reports. They are sure to affect markets today. Apart from the earnings reports for the first quarter, investors will also take notice of industrial production data from the Eurozone and the UK GDP figures for February. The US will unveil the Producer Price Index and initial jobless claims report. That's all for now. Subscribe to our channel and keep close tabs on the market developments with us. See you soon!